Good morning, everybody, and welcome to the Gold and Silver Club end of week review for gold and silver and commodities for the 24th to the 28th of September, presented by myself and Nick Kalsi. It's been another very interesting week this week, so plenty to talk about and lots of additional setups to look out for next week. So today, guys, we will be reviewing the latest developments in the commodities market, analysing the week's performance. This live session will cover end-of-week summary for gold, silver and oil, as well as commodity currencies and looking at some other external markets. We'll look at the top trades of the week. We'll be looking at live market commentary and technical analysis. We'll look at the markets right now this morning, and we'll look at the week ahead, so key events looking forward. So very quickly, I'm Phil Carr, for those of you who don't know me already, professional trader, trainer and speaker, co-founder and director of the Gold and Silver Club, and I specialise in teaching people how to make money from trading the biggest financial markets in the world, so Forex, gold, silver and oil. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. I'm responsible for the research and development of the Gold and Silver Club's trademark strategies that have a proven track record of generating returns for traders, and I'm a regular contributor to a number of financial publications and speak at numerous trading seminars and workshops, sharing knowledge with like-minded investors and traders. This is Nick Kalsi, who's joining me on the call today. He's going to be helping with all your questions as well. Nick Kalsi is an investment analyst, trader and speaker. He began his career within private wealth management in 2002, before making the transition into proprietary trading. And prior to co-founding the Gold and Silver Club, Nick spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And it's through Nick's first-hand relationships with some of the world's most successful traders that Nick has discovered the formula, mindset and tools that can give any individual the definitive edge to make money in any economy. He is responsible for investment analysis and portfolio optimization of the Gold and Silver Club's proprietary trading strategies, and also regularly writes for a number of global business and financial publications and appears frequently on television. So you're certainly in good hands today. I'm just going to check here very quickly with the audio has dropped. Yep, okay, great. We've got some very informed traders on the call today. You're absolutely right. We're at the high of the week, which is interesting because this time last week we were at the high of the week as well. So we're currently at circa, yeah, you guys are spot on. Wow, we've got a great audience today. $1,781 per ounce. We are actually at all-time highs for gold priced in euros and Swiss franc at the moment. So although USD is currently below that high of $1,920 per ounce, very interesting is that we are at the all-time highs for the euro, gold priced in euro and francs. So certainly a good time to be looking at gold and silver. Loads of trading opportunities, which we'll be talking about further right now. Also, do not overlook the commodity pairs as well. These are strongly correlated with gold and silver. So you can see that essentially here we've got Australian US dollar, which is associated with gold commodities. We have the New Zealand dollar, US dollar, which is associated also with gold commodities. So these two in particular, these are well worth you having a look at alongside gold and silver. So you want to be paying attention to these. Often you will get an exaggerated move in these commodity pairs. And these are closely related due to the amount of exports that these countries have. They're major commodity exporters. So as the commodities rises, the value of these currencies typically rises, and as the commodity falls, the value of these currencies typically falls. And we're very shortly going to move on to some live trade examples. Okay, so the top trades of the week from Monday the 24th to Friday the 28th. We've had some very interesting trades this week. Okay, so the top trades of this week, first of all, was New Zealand US dollar, which we're going to go through all these trades in detail. but we had a price action trade earlier on during the week. So this was actually on Tuesday this week. So this was an entry, and we'll go through the chart in more detail in a second. That was an entry at 0.8209, exit of 0.8276, and a profit of 67 pips. Okay, and now crude oil. Crude oil was another price action trade. Crude oil was a phenomenal trade this week. So we had and I'll show you this because this was interesting because it was with pinpoint accuracy. Okay, so with this particular trade, we got into the trade at 108.43. And we're just going to check here. You can see our screen okay. So we got into crude oil at 108.43, and our exit was 112.23. So $108 per barrel, and we got out $112. It was a huge trade, 380 points or pip move on that trade. And we'll talk through that shortly. And gold, we had a fantastic pivot trade earlier on this week where we had a big pullback in the price, which actually came back to a support level, and we had a 280 point move. So for a total of our best trades this week of 727 pips there. Okay, so here, first of all, is New Zealand dollar, US dollar. So this was the price action trade we had here. We actually came down to test the major Fibonacci level, and you can see there we did break through it, but our ratios were just about kept us in this particular trade. We actually stayed in this trade with our stop loss by circa about 2 points before we actually went back to the upside, and we got out at our take profit level. You'll see the next resistance level, Fibonacci level there. And I'll actually show you live on the screens very shortly. This is a screenshot just demonstrating the trade there just as we had taken profit. So that was a nice almost 2.5 to 1 ratio on that one. Crude oil, this was actually a setup. So this was about midweek actually that we had this trade. So we saw the price come down, test 108.43 Fibonacci level. We had a fantastic move on there because we literally came down to that level. You could see buyers got straight in with pinpoint accuracy. We bounced off there. We got into that trade. And this was actually in the evening. We posted on our forum with our traders. We were looking at this setup. So we were 180, let's have a look at this. We were 180 points up in the evening. You can see that trade there by the evening on the 25th. And then on the 26th, we'd actually done the whole move. Oh, you haven't got, we're missing a slide there, guys, but I will show that to you on the live charts. And on the gold trade, this is the gold trade earlier on this week. This was a pivot trade. We entered in at 1740 on a pullback, exited at 1,768 dollars on the gold there, and that was for a total of 280 points. Okay, so it's probably going to be easier to just show you now on the actual live charts. We'll talk through some setups as well. So we're going to flip across to our live charts now. Okay, so here we go. We're going to have a look at crude oil. Okay, so we're going to look at crude oil now, and what you'll see from here. So you can see earlier on in the week where we came down and tested this level here. So this was Fibonacci level 108.43 that we were talking about here that we bounced off. And our take profit level on this, and we've actually managed to break up to the next level here as well. This was our take profit. So this was $112.23. So this is the total move here that we were looking at, 380 points. We did that actually in 24 hours. And you can see on this, the risk to reward was fantastic. So the actual stop loss required for this, you could have been kept in this trade with just as little as about 3 or 4 points on this trade. If we zoom in on this, you can see the price just bounced off with pinpoint accuracy on that. So, I mean, some of you trade off Alpari, some of you trade in lots like we do. So that represents really, if you're trading at one lot on a trade like this, 380 points is £3,800 on a trade, which is over the course of 24 hours. And you would have had a slightly larger stop loss than I've talked about there, but even let's, for argument's sake, say that you had a 10-point stop loss on that. At one lot, you're looking at about a risk of £100 on that trade in order to make 3,800 if you manage to stay in for the whole duration, and our take profit level there of $112.23. We were actually looking at crude oil last night, and we were consolidating around this 112.23 level. You can see we bounced off, and then today, some of our traders actually took this trade. We've moved up, and we've actually come in here and tested the next level up. So not such an impressive trade. It's about a 90-point move there. But you can see after this consolidation period last night, the prices managed to now make that resistance level into support, and we've rallied there to hit the high level, $113.13. So what's next for crude oil? Well, looking at our charts here, I mean, this has been quite an impressive rally back after we came back to some lows last week. Okay, if you're on last week's call, you'll probably remember we actually sold crude oil short. But so this is where we are at the moment. So whether we will now see another breakout to the upside, and if we were going to get to our next price target, if we were to see a breakout, it's not a recommendation. We're just looking at price action here. This is the level that we would be quite interested in for another take profit level here. Obviously, we are consolidating at the moment again, where we've had previous level of consolidation early in September between that 1112 to 1113 level. That actually previously provided a lot of support. So previously, this level, this whole level here, for most of August actually, we were being supported between $112 and $113. So that was good on pullback trades. Okay, so now we are going to move across to silver. Actually, we're going to look at gold first of all. Okay, so let's zoom in so you can get a good look at gold. Gold at the moment, we are back to $1,780. Where we've got resistance at the moment appears to be, I mean, we are struggling to get past the highs of February earlier this year. So towards the end of February, we actually got up to $1,790 per ounce. We got just shy of that last Friday at $1,787. You can see this whole level of resistance here on gold, which is around about the 1,777 level. This whole area is providing resistance. We've slightly broken above that today. For any sort of breakout trade, we are interested in the price to get above $1,790 per ounce. So we are keeping a close eye on that. I mean, for those of you who, you're trading regularly, or you're not going to be in front of your computer all the time, it's worth just having alerts set above these sort of key prices. For example, above $1,790. So if we do get a breakout, you can go to your screen and see what news is causing that and act accordingly. But at the moment, we are at the top of the range. So we are almost at the highs again of 2012. Now, this is the dip we were talking about earlier on this week. So you can see towards the beginning of September, a level of resistance here was $1,738. So this was a level of resistance here. We came against it about 2 or 3 times. We bounced off it, did break above it, came back down. So this was a level of resistance. And then you can see this level of resistance has now become support, where we had a pullback on Wednesday. So this pullback presented a great trading opportunity. If you look at this, we got in around about $1,740. Our exit of this trade was at this level here, which was $1,768, this Fibonacci level. So this is the trade that we were looking at to take advantage of the move from 1,740 to 1,768. Okay, we're just getting some messages through that the audio is all fine now, so that's great, guys. Glad that's working okay. So if you're looking to, we go through the detail of this trade. Okay, so the price came down to $1,738. So you might say, okay, that's all very well. Where do I put my stop loss on this? So if we look previously to where levels of support are on this, we had some Fibonacci levels here around 1,722. If I actually bring up another screen here. Okay, so we are going to show you here. This is again bringing up gold. So we're looking to have our stop loss. There is another Fibonacci level here, which is 1,727, which is just around about these levels here. It's just disappeared on me, but it is here. 1,727 is where this Fibonacci level should be. So we were looking for a 2-to-1 ratio on this particular trade. So our stop loss was just tucked beneath this level here, and was also tucked just beneath this level of previous consolidation. And that was a 2-to-1 trade, which worked itself out in 36 hours. So we were happy to have taken profit at that level, and now we're seeing what additional trading opportunities we're going to get on gold. And now we're going to look at silver. So silver, very interesting. We were here this time last week as well, guys. So those of you who were with us on last week's webinar, we're right back up to this level of consolidation again. So we're at 34.78 right now. So we keep on bumping our heads against this level. We're struggling to break out. We almost broke out last week. We got to 35.14, but we weren't interested in this in a breakout until we get above this level here. So you can see in white there, we didn't get above it. We looked like we were about to get a breakout, but then the price just broke down again. We've got strong resistance around this level at the moment. So we're getting quite near to testing it again, but you can see this whole area here is presenting resistance right now on silver. So 34.75. There's no reason for us to be entering this particular trade right now. We're right at that resistance level right now. Whether we're going to see another pullback on silver and we are going to come down and test these lower levels of support, you can see we tested another area of support where we had previous resistance and consolidation early in September here, earlier on during the week. So that offered a nice day trade. You can see just here. This is where we've got consolidation at the moment. But right now we are back up to that resistance level. So we're looking to see if we're going to get a breakout above 35.15, more abouts on silver, or whether we're going to come back and retest around about the 33.50 level, which is offering support at the moment. Okay, so now what I want to do is actually, we're going to look at some commodity currencies. Okay, so as we were talking about before, you'll often see New Zealand US dollar, Australian US dollar move very similar fashion to gold and silver. So here you can see where they pulled back earlier on this week. So this is the trade I was talking about on New Zealand US dollar. So we had a price action trade on. We came back. We've used some other additional indicators, which we can't go into too much detail on the webinar here. But we've got essentially a price action trade here. This is the Fibonacci level we were looking at. We could see from a previous low put in on this candlestick, this is what we wanted to be just below. And you can see we came within about 2 points of hitting our stop loss. We stayed in the trade, and this was our take profit level here, which is previous. We're actually broken above that now, but we were happy with that. It's about a 3-to-1 ratio. So if you're looking in terms of risk, this was the risk. Make it nice and big so you can see it. And this was the reward. Okay, so circa, the risk on that trade was circa around, okay, so we've got about 24-point risk in order to make, it was actually just under 70 points on that, so just under a 3-to-1 ratio. So that was a setup this week on New Zealand US dollar, and that was around about the same time that we actually had the pullback on gold as well. So we can see, so New Zealand US dollar is actually rallying at the moment. Same situation that we've got on gold and silver. We've hit our head against this resistance level again. We haven't broken through it. The price is currently probably some profit taking going on at that level right now. So we're interested to see, are we going to see the price just come back and retest these lower levels again? Is it going to do this, or are we going to get some momentum this afternoon or next week, which pushes us to break out above this resistance level? Australian US dollar, it's not moving as smoothly. New Zealand US dollar is more our preference at the moment. It's kind of, it's not moving so well with price action and our other indicators that we utilize the support and resistance. It's a bit more choppy at the moment, but you can still see the correlation with gold and silver on Australian US dollar as well. And USD CAD, here you can see, obviously this is inverse to gold and silver. So when gold and silver are rallying, you're going to see USD CAD going down, which you've seen since yesterday, since the rally back on gold and silver. You can see the price has been going down, and then we're just getting a slight move to the upside at the moment. So we've got another Fibonacci level or price action level just here. Just go out to a 4-hour time frame on that. Yeah, you can see it's a little bit more choppy. I mean, I would be more interested in setups, which we pointed out there, on gold, silver, oil, New Zealand US dollar at the moment than this particular currency pair right now, but I would still monitor it. We're just going to take a quick look at some other commodities here. So we are going to look, corn is an interesting one. So corn has finally broken down. So you can see we've actually, from this Fibonacci level here, look at that, we tested that a lot of times, 1, 2, 3, 4, 5, 6 days. We tested that Fibonacci level, and now we've broken down and we look like we're about to hit the next level down. So corn has finally broken down. Corn, if you're not aware, had a phenomenal move over 6 weeks. It gained over 50%, huge move. So in points, that was, I don't know, that's absolutely huge, but it was in 6 weeks. We moved, let's have a look at this. Depending on where you're, on what platform you're using for this trade, we moved in the region of about 2,623 points on corn within about 6 weeks. So it was a huge move. You can see it finally reached the bottom the end of June. This is due to some influence by crops in the US as well. So there are some fundamental reasons it did that. And here, yeah, we can see at the moment actually looks like we're just about. So if you had been short that trade from the level that we're just looking at, let's have a look. If you've been short from this price action level 737, you would be getting very close to your profit target at the moment. So you can see the price is almost, yeah, it's almost hit the next price action level down. And we just, I think that's the more interesting out of those three commodities. We're just going to quickly have a look again. Okay, so we're just going to at copper. Copper's doing a similar, has hit some resistance this week. Not so interested in that. Gas as well. Aren't really any trade setups on there right now. And we're going to just quickly move over to, bear with me, we're just going to go on to some currency pairs, if I can, additional currency pairs, if I can bring those up. Okay, so here we actually just want to point out Australian dollar, Japanese yen, which this week we had some additional, another great price action move. So where I've highlighted in blue there, you can see we had the price breakdown from 80 points, to look at that, 80.93. We had a breakdown in price. We're just going to draw for you what happened here. So you can see this level of support here, and we broke through that. I believe that was on Wednesday, and we've just come right down with pinpoint accuracy. We've actually bounced off 50% retracement there on this Fibonacci level, and we've just come right back up again. So that was with pinpoint accuracy. I mean, this is obviously a market which utilizes price action, so you can actually have a look, trying to zoom in on that. But this is the trade I'm looking at here. You can see the price came down, tested that level, and we've just come back to the upside, and then we've done that within 24 hours. So 71-point move there on Australian dollar, Japanese yen. So those are some of the highlights of this week and what we are currently looking at. So we're just going to flip back to what news we're going to be looking at for next week as well now. Okay, great. So the week ahead, guys. So if you want to get your diaries out, just note these down. I'm sure a lot of you guys have economic calendars already. But here we go. So the week ahead, key events looking forward. So next Tuesday, Australian dollar interest rate decision. So the Reserve Bank of Australia will come to a consensus on where to set the rate. So traders will watch the interest rate changes closely, as short-term interest rates are the primary factor in currency valuation. So a higher than expected rate is positive or bullish for Australian US dollar. while a lower than expected rate is negative or bearish. So it's important because obviously Australian US dollar is correlated to gold. Next Thursday, again, another important decision, Euro interest rate decision. So a higher than expected reading should be taken as positive or bullish for the Euro. And of course, Euro is correlated fairly strongly to gold and silver. So typically, if the Euro is strong, you will see that gold and silver are strong. And if the Euro is weak, typically gold and silver are streak, because we have an inverse relationship to the US dollar with the Euro. While a lower than expected reading should be taken as negative or bearish for the Euro. So if the Euro weakens, expect gold and silver price to tumble. And on next Friday, the big one. So if you can only trade one announcement next week, we've got non-farm payroll next Friday, 1:30 p.m. Huge announcement for the market. This always causes massive volatility. So if the numbers which come out, I mean, it's not always logical the way the non-farm payroll comes out. So one doesn't always mean the other. In terms of bad unemployment figures don't always mean we're going to see a rally in commodities and vice versa. But typically what should happen, if the markets were logical, which they're not, you would expect either a strong US dollar to come out of if the unemployment figure is positive for the US, and a weak US dollar if the unemployment is negative for the US. So it's important again because US dollar is correlated to gold and silver on the majority of platforms that we are trading. So you want to be just ready to be able to trade that announcement either way, really, whether you want to be taking a long position or a short position off the news. And that is bringing us to an end of this week's summary, guys. Bang on 11:30. So, guys, I would definitely, if you want further information on that, or you'd like to also get a weekly report, feel free to sign up to the Gold and Silver Club newsletter at www.thegoldandsilverclub.com, and you can find tabs there. You've also got various trading tools on there. You can see the trading platforms that we are using, some of the tools we're using for real-time news, such as Reuters. If you've got any questions at all, please do contact us at office@goldandsilverclub.com, or feel free to telephone us on 0207 193 0403. That's 0207 193 0403. Okay, fantastic. So as that's drawing us to a close, I think Nick's answered several of the questions there. If you do have any questions, guys, please do put them in the forum now, or feel free to send us an email. Thanks, Mike. You're absolutely welcome. I think we had a question a little bit earlier here. Okay, from Dan V. Okay, so Dan V's just said there's an interim top on crude oil there. So, yeah, we've actually, I mean, we've rallied quite strongly on crude oil from the bottom we put in earlier this week. So we're currently around that 113 Fibonacci level as well on crude oil. So interested to see if that is going to be an interim top on crude. Okay, so we've got another question coming through. What time chart do you use? Okay, so in terms of the different time frames we're using, we are using a mixture of daily time frames, 30-minute time frames, and we would be zooming in further into 15 5-minute time frames when we're going to take positions where we want to get pinpoint accuracy on a trade to get the very best entry point. Yep, Ingrid, that's absolutely fine. Look forward to hear from you on that. Please do call us on the number there. I know, Ingrid, you're a newbie to trading, just actually recently. I think you've just been trading for just 1 week now. So don't worry if this is not meaning a lot to you. If this is meant for all kinds of traders, from beginners to more advanced. But obviously, if you're a more advanced trader, you're going to understand a lot more of the terminology. So don't worry, Ingrid. We will have a chat with you. Okay, so we've got yeah, no problem, PJ. Thanks very much. So does results differ on different charts? Results differ on different charts. Can you be a little bit more specific there, Can. To answer your question, okay, like 30 minutes. Okay, so by results, I think what you mean is potentially like 30 minutes or 2 hours. Do the results different? What you will tend to see is in different time frames, you will see different support and resistance levels on the candlesticks. So if you're in a daily time frame all the time, for example, you're going to miss some of the setups that are there on the 30-minute time frame or the 4-hour time frame. So one of our preference time frame is a 30-minute time frame to do for a lot of the setups that we are getting, but we can also, when we're looking to get in with more accuracy on a trade, so when we're about to enter a trade with our stop loss and working out our risk to reward ratio, we will zoom in further onto the trade, execute the trade with the best possible risk to reward we can. So what time chart was, just got a question there about the different time frames that any suggestions there? As I say, you want to be looking at daily time frames to get an idea of the trend of the particular market. You may be using price action. The examples we gave there of Fibonacci and price action, use the daily time frames to actually draw all the daily charts to get all the retracement levels, and even go out to weekly charts to get all of those. We haven't got time to go into where we've drawn all those different price action levels from, but we're typically using that to get an overall picture of the trend and price action, and then we're zooming in more. We're using additional indicators on either 30-minute time frames or going into even smaller time frames in order to take trades. Yeah, Mike's absolutely right there. It does depend if you're going to be more of if you're actually day trading, or if you're more of a longer term trader, if you're trend trading. What you will find is the further you go out onto daily and weekly time frames, the stronger you will see support and resistance levels. A good example of that is with gold and silver. So over the last few months, well, this year actually, gold has had that 1530 support level tested over 4 or 5 times during the last year, and that's been a very strong area of support that you would see on a daily time frame. The same with silver. Every time silver has gotten under the $27 per ounce level, and you can see that very clearly on a daily chart, that has been a strong buying opportunity. We haven't in the last year broken through $26 per ounce. So that is reflected a very strong area of support that you can get on a daily time frame. Yep, no problem at all. Glad that answered your question. That's fantastic. Okay, brilliant, guys. Well, no, thanks for the question, guys. It's been another great session. Great to keep it nice and interactive. So you've been a great audience today, and I think we're going to wrap things up there, guys. So again, next week, the big announcement is going to be next Friday. Is obviously non-farm payroll, and we've got the other news announcements there. But do subscribe to our newsletter, and you will also get sent all these details as well, so you can put those in your diary. Okay. So we look forward to speaking to you on the next one. That won't be next Friday. It's going to be the following Friday after that. So we will speak to you again on Friday, the 12th of October. So have a great week's trading, guys. And no, Carl, we can't give any recommendations, but have a great week's trading, guys, and we'll see you on the next one. Okay, guys, bye-bye.